So good afternoon, everybody. It's always a great privilege to be able to speak, and thank you, Jane, and thank you, Lewis. So what are we going to talk about? We're going to talk about where fintech investment has gone and various conclusions and points which arise from that. Very first thing is my legal disclaimer. Nothing I say is any form of investment advice whatsoever. I apologize for that. So, some metrics. The world fintech ecosystem is round about 62 billion to 66 billion per year now. In the first 6 months of this year, 32 billion has gone into about 1,000 projects. And in 2018, it doubled from 2017. By country, you've got the United States is the largest recipient of investment, 43%. And remember, the US really doesn't have any significant investment into digital challenger banks yet. China is next, 25%. And then you've got the UK leading the rest of the world in Europe. And then India at 10 billion is starting to show its really true potential. And then everybody forgets Canada, which has an absolutely superb fintech ecosystem. Where has the money gone? 30% of it's gone into direct lending, and 25% of it's gone into payments. And then you see all of the other, these are the very large segments, all of the very other segments there, with insurance, with some very, very large insurance investments into things like Oscar and Lemonade in the US. And even the small, minor segments are very large there. You can see prop tech at 4.5 billion, fraud at 4.6 billion, and even tax tech has 800 million invested in it. The trends by region, this is the last 2.5 years. You can see the United States is the biggest ecosystem at $44 billion, followed by China. China in 2019 has slowed down from an absolutely stellar year in 2018. And the emphasis in China is moving towards AI and analytics. The UK having an absolutely fantastic growth from 17 to 6 months of 2019, $4.8 billion, compared to the other two figures are full year figures. Europe, again, a very, very robust developing ecosystem. India, again, as I said earlier, developing. Canada's there. And then the rest of the world. You can see how investment is flowing through geographically, where the business models which have been established basically in the West are going east and south. This is the UK fintech investment, and the final figure at 4.8 billion, that's just for 6 months. Wow. Absolutely fantastic. So there was a blip for Brexit, but since then it's really taken off. And these are the companies which have received investment, and now they're big, they're proven, they're expanding their product range, and they're going geographic. Tremendous. And I can remember the days when 50,000 raised in London. The people who, this is 10 years ago, the people who raised that were absolute superstars. So ecosystems, I think it's more about ecosystems now. Payments, internet giants, digital challenger banks, blockchain, AI, lending, existing financial services ecosystem, and then the one everybody forgets is the mobile banking ecosystem. The payments ecosystem, 56 billion has gone in, and 203 billion has come out, either through M&A or IPO. This is red hot. Why is it red hot? Even if you do nothing and gain no market share, the number of transactions that you'll take over the next 5 years, this forecast is going to double. So even if you don't gain market share, your electronic payments will double. The internet giants, what are they doing? I think they're trying to combine financial conversation with social conversation. And here are the internet giants, your local internet giants, which are global. And I think they're now getting into a position where they're going to have a profound impact upon the world financial services industry. We all know this, but I think it's now going to get very, very serious, and I'll come on to that later. And then Alibaba and Tencent. They're broadly about the same size of ecosystem, but this is such fantastic scale. 300,000 transactions per second, these ecosystems process. And they're in insurance, they're in credit checking, they're in banking, they're in financial management, asset management as well. These are massive ecosystems which the West really does not have anybody with such scale. And then we come on to the US and Facebook. Libra is for everyone. A simple global currency. Facebook always have very, very big missions and objectives. And this is the original members. I've analyzed them slightly differently to illustrate the private equity ones, the blockchain infrastructure ones, the telecom ones, the platforms, and the cash in and cash out. It just gives a bit more understanding to the ecosystem which they're developing. And here you have the response of the regulators. At the top, at the US House of Representatives, a cease and desist letter. The Bank of England, a more nuanced approach, where open mind, but not an open door. If it meets the test of regulation, then we might be able to do something. And I think what is really, really caught the regulators' attention is the scale of money that might end up going through these systems. Ant Financial had something, and I apologize for the pronouncement, UABO, hidden treasure. And they got up to $200 to $300 billion in it from 600 million users. Facebook, with 4 times as many users, might end up with 1 trillion to 2 trillion float liquidity in their system. And I think for the regulators, it might be a Bretton Woods moment where they've really got to be serious about cryptocurrency. They can't ignore this. And then you have the rise of jumbo investors. There are investors out there whom, if you can put a good business case, will give you $100 million, or in the case of Wirecard, $900 million. These fundamentally changed the competitive environment. Open banking and digital challenger banks. APIs, there's 2,000 of them. If you can't make a business out of this, I say to the startups I mentor, you must, I think it's time for you to go home. Some of the most valuable businesses coming out of this are the businesses that provide the software architecture to connect APIs into bank stacks and third-party stacks, and you see some illustrations of them there. Revolut, this is an example of the marketplace that gets developed through APIs, and it is the capture of all the business processes around SMEs. How are they challenging? You'll see that probably the largest ones are WeBank and MyBank in China. I have difficulty in getting precise figures for that. But then followed by Nubank in Brazil with 7 million accounts, and then Revolut, which has 6 million, not 4 million on the slide there. I thought I'd change that, but obviously not. And then a whole series of neobanks as well. And then the segmentation. For business, it's around SMEs. And consumer, the very traditional segmentations there. But then you have one which doesn't get very much mention, Marcus by Goldman Sachs. The figure down there is 36 billion. It really is, the latest number that they've disclosed is 48 billion, right? Remarkable achievement in terms of deposits. So mobile money operators, the African mobile money environment, in total there are 900 million mobile money accounts, absolutely massive. Doesn't really come onto the fintech radar very often. This is the growth of it in Kenya. That chart is a growth of financial inclusion. Mobile money pays for itself. There is no subsidy. It is commercial. It pays for itself throughout sub-Saharan Africa, throughout the Middle East, throughout the Far East. In Africa, there's been a load of large VC raises in advance of the transition from Nokia text phones to smartphones. There's been over approximately 400 African fintechs funded. Now onto blockchain and looking at VC investment and corporate investment. So it started off by VCs investing in Bitcoin, and it's now switched to investment in blockchain. And 2018 was a stellar year for that. Trade finance seems to be the furthest developed blockchain, corporate blockchain. You see all the consortiums there. And it's built on top of TradeLens, which is the shipping blockchain developed by Maersk and IBM, but it's now become a foundation. Corporate coins, basically SWIFT, now are going to get some really tough competition from JP Morgan and IBM WorldWire, as well as Ripple. How has the ICO environment developed over the past few years? So basically, 2016 didn't exist. 2017 got better. 2018 a stellar year, and 2019 back to a much lower level. The gross value of tokens is not the net value of cash actually paid for tokens. It's probably in the region of 20 to 30% of those figures there. Here is the roller coaster. You can actually see the investment by month peaking in the first half of 2018 and then falling off. And then if you put the coins and exchange to one side, what is happening here? May I say it's a new form of mutual economic agency where if you use the coin becomes more valuable, and that's motivation. And but I really think the success of blockchain will be in the functions, i.e. the business models, not the form, not the coin or the exchange. Here are the 1,600 or so ICOs analyzed by business model. Majority are in money, followed by system, which is basically building a better blockchain architecture, content distribution, and then revolutionizing processes, are tokens working? These are tokens which are traded on exchanges, and you have fiduciary tokens, which are money exchange or an exchange, but then you have tokens which are things. And earlier today we had one example in the agritech area, and there's another example. And I think that the smaller market value tokens have got to really gain traction. But these have gained traction because, you know, at the bottom there, they're worth 20 million, 24 million. This is real. This is not fake, insofar as anything can be real in the cryptocurrency world. Cryptocurrency lending, you now have an ecosystem with at least 4 billion in there, and that provides the oil in the whole cryptocurrency ecosystem. And then, how may chains connect in the future? So if we go back to the Maersk container, you've got to move it, you've got to finance it, and you've got to pay for it. And there I've given the illustration of all the coins paying for it. But maybe connecting everything together, there will be something called an autonomous intelligent agent to allow you to optimize your position between moving, financing, and paying. Change the future. Again, I think it's going to segment into global, regional, local, or vertical, and there will be corporate controlled and governed chains, as well as completely independent chains. And then we may see the emergence of the intelligent chain, where the autonomous agent optimizes your position in the chain and between chains. And Fetch AI is an example of a company searching in that area. And then DeepMind, right, are then looking at the possibility of combining agents together through convoluted neural networks and GAN networks. So conclusions. Fintech investment is buoyant. London's one of the biggest ecosystems. If you're a good idea, got a good idea, a good team, can prove the users will buy this, right? You've got a chance in this city. And then do you have to be part of a really big ecosystem to survive at scale? You know, beyond the boundaries of the bank? Corporate blockchain, I think the use cases have been established in trade finance, and it'll find its way into exchanges. Open token blockchains, I think they're still searching for traction. They're starting to get there. But then you have the challenge of connecting chains. As chains become a recognizable system, how do you connect them all up? If you want to move something, if you want to pay for something, and if you want to finance something. And finally, it's always said that fintech should collaborate with existing players. Yeah, I go along with that, but maybe. Jar Jar has bought the credit card system of the Bank of Ireland for $663 million, financed by KKR, one of the big jumbo investors. Perhaps Jar Jar saw the card and then bought the bank, and this may be a trend that might happen in the future. Thank you very much.
Thanks, Ian. We've got a minute or two to take some questions. So if there's one hand up in the front row, and there's also one here around VC firms to help raise funds for fintechs. Although we've got some VC firms coming on a panel shortly, so we might best put that to them. Yeah. Question in the front row here.
Thank you for the presentation. Most people think that traders simply speculate, but people don't think that actually traders allocate funds across different industries thereby setting the trends in the global economy. So my question is, in your opinion, say in 20 years, how important retail investors are going to be in this ecosystem in terms of setting the trends in the global economy?
I think the world, funnily enough, is getting younger and older at the same time. That the people who are older, my age, we depended upon pensions from companies. The new world is that there will be no pensions from companies. And this creates an absolute massive investment market. And to come back to Africa, this is now, this micro-investing for the long term is just starting off there. And I think that the investment management and savings are two areas where there's massive opportunity, and in insurance. Only 20% of the world are properly insured. Yes. And then the adjustment mechanism in the financial markets. So I see an enormous amount of growth there.
I'm going with you. Is that all right with you? No, they just had lunch, I reckon. Well, you're all here. Let's go.
Any more questions? Am I getting away with just one question?
Okay, last question, and then we've got the VC panel to answer that one. They're standing up the back and they're ready to go. Any more questions? All right, big hand for Ian. Thank you very much. That's a massive amount of research.